Peace and happiness to you all. So listen, in this video, I want to talk about positioning your personal credit so you can get access to business funding. Now, this is one thing, this is what you need to know. When it comes to accessing business capital, you don't need to have revenue, right? Especially if you're a brand new business. You don't need any revenue, you don't need customers, and you don't need a product. You just need to first have your personal credit structured properly and your business registered. That's what you need. That's the prerequisite in accessing capital. Your personal credit and your business structure, right? So now, this is what I'm going to talk about, right? My name is Vita King. I used to work for the big banks, right? The big banks, the big banks in Canada. When I left, one of the things I did was I wrote a book, right? You can find this book on Amazon. It's called The Credit Cheat Code Manual, showing people how to position their personal credit, structure their business so they can get access to business capital, right? So now, one of the questions that people were always asking me is, do I need to have revenue? Do I need to have products and services in order to apply for business funding? The question is no, because the banks don't really care about your products that you're offering, your services that you're offering. They only care about your personal credit and how your business is how your business is registered properly, right? Because one of the mistakes a lot of people do is this: they apply for business credit without having any thorough knowledge of the underwriting guidelines, of the criteria that the banks are looking for, right? Because the banks have underwriting guidelines, criteria in terms of, they have a checklist, right? They're looking for certain factors when it comes to your personal credit. So a lot of people just apply for business credit without having that knowledge, right? So you don't want to do that. You don't want to be guessing, right? Because that messes up your personal credit. You end up you end up accumulating too much inquiries, and then that damages your personal credit, and then you just run into a wall, right? So you don't want to do that. You want to stay away from that. So we're going to talk about pre-revenue funding, right? Getting access to capital, even if you don't have any revenue, your business doesn't have any capital, and so on. So now there's two paths to this, right? You can either go the venture capital way, or you can go the banks and credit union way. So that's my area of expertise, right? I come from the banking industry, so I know how to access capital when it comes to banks and credit union, right? Now, when it comes to venture capital, angel investor, I really don't know that route. I've never obtained funding that route. I've only obtained funding through banks and credit union. Now, also, I'm going to leave the link below to our academy, right? Because we do have an academy. It's called the Funding Academy, right? This is where we show you how to access business funding, right? We have training videos, and we also show you how to use that funds properly, right? So we have AI and business education, right? So it's an academy. There is membership. We have a membership. You can either go with a monthly or you can go with the quarterly, but it's a membership. It's an academy that teaches you how to get access to business funding, right? So, because that's my area of expertise. I come from the banking route, so I know how to access capital and so on. So now, when it comes to accessing capital, very important, the personal to business pipeline. Your personal credit has to be in position, right? And then you have to structure your business properly. And then once you have those two requirements in place, you can apply for unsecured revolving capital. Now, unsecured revolving capital, we're talking about business lines of credit. We're talking about business credit line, business credit cards, business overdraft. You want to stay away from the loans, right? The installment loans, because that is really not beneficial for you, especially when you're a brand new business. You don't want to go for installment loans or business loan. You want to go for the unsecured revolving capital. Now, this is very important. That 24 months window, right? When you incorporate a business, you have 24 months to get as much capital as possible, because when your business is brand new, the banks, they don't evaluate your business. They evaluate your personal credit, right? So once you pass that new business status, then the banks are going to start looking at your business as a mature business. So when you're brand new, you have 24 months. Under 24 months, banks don't look at your business activity, right? Let me slow it down. Right? Because I'm going fast, because I want to keep this video under 15 minutes. So that's why I'm kind of rushing, right? But let me take my time to slow it down. So the 24 months window is this. When you incorporate a business, right, you're considered brand new. When you're considered brand new, the banks don't look at your business activity, right? Because remember I talked about, right, you can I talked about how you don't need products, you don't need revenue, you don't need services when you're applying for business funding. So this is where that 24 months rule comes in. When you're a brand new business, the banks are not going to look at your business activity. They're only going to look at your personal credit, how your personal credit is positioned, and how your business is structured in terms of, is it incorporated? Are you a sole proprietor? Are you a partnership, or you're a corporation? After 24 months, now the banks are going to start looking at your business activities. This is where they're going to start asking for your your tax return, your financial statements, and so on. But when it's a brand new business, they don't ask for tax return or revenue, your financials. They'll only look at your personal credit, right? That's it. So you want to take advantage of this 24 months period, window period, because after 24 months of incorporating your business, the banks are now going to start looking at your business activity in terms of balance sheet, in terms of revenue, in terms of taxes, how long you've been, right? So you want to avoid that, right? You want to avoid that route. You want to make sure the moment you incorporate, try to access as much capital as possible. So that's why, as I said, we have our academy. In our academy, we show you how to position your personal credit, right? It's a membership. It's monthly, right? So we have the monthly option. We have training videos. We have ebooks. We have lender database. We have resources. We have the grants. We have grants, and we have a structured course to show you how to access capital. So that way you avoid this 24 months window, right? Or this 24 months, you stay within that 24 months window rule, okay? Because remember, the clock starts when you incorporate, right? Banks view as a startup for exactly 2 years. After 2 years, then you're no longer you're no longer a new business. You're now considered as a mature business, okay? And then banks don't care about your score. Now, your credit score is only important. So when it comes to credit score, right, your credit score is the last thing that the banks look at. The banks look at your credit profile, what's in your credit profile in terms of what the data, right? They look at late payments, they look at inquiries, they look at the amount of accounts or trade lines that's open, right? They look at the last recent application. So they're looking at data. They're looking at your profile, not your score. The score is the last thing that they look at. The score usually, they use the score to determine the interest rate. But in terms of approval, they're looking at the credit profile, right? Your credit score and credit profile are two different things. They are, right? They're not the same, but they are within the same, the same, file, right? You have your credit score and your credit profile. Credit approval is based on your credit profile. Interest rate is based on your credit score, right? So banks don't really make lending decision based on your credit score. They make lending decision based on your credit profile. Now, they do have a minimum score, right? That a threshold, a minimum score that they look at, that they evaluate, right? So you want to meet that minimum score. It's usually around 660, right? So 660, 670, and 680, right? So let's just say 660 is the minimum score that most banks look at, okay? So now, before you apply, right? You want to structure, structure before you apply, right? Make sure you incorporate, make sure you incorporate as a corporation, because sole proprietor, it's more difficult to get funding if you're sole proprietor than it is if you are incorporated, right? If you're incorporated, the banks, they tend to look at your business more. They tend to look at your business more favorably, right? Or they view you more because when you're a sole proprietor, there's too much risk that they're taking, right? Because you are the business. But if you're incorporated, then the banks are looking at it as they're looking at it this way, right? If you're incorporated, there's a possibility that your business could grow, right? And they prefer dealing with corporation than personal businesses and so on. So, okay. You want to avoid high risk industries, right? So I'm going to talk about high risk industry. That's what we talk about in our funding academy, right? There's some high risk industries that banks don't like lending to, right? So if you are in these high risk industries, for example, real estate, if you're in the real estate industry, if you're in the financial industry, if you are, in the financial, real estate, what else? There's several industries that you want to avoid, right? We have a list of them inside our academy, right? So this is inside our academy. There's a list of industries that we show in there. Access before you need it. Now, this is very important. Access capital before you need it, right? Here's my saying. Here's my motto, one of the phrases that I always say. It's better to have it and not need it than to need it and not have it, right? Especially revolving credit, business lines of credit, business credit line, business credit card, business overdraft. These are revolving product, meaning that if you're not using these products, the banks are not really charging any interest, right? So it's better to have a business line of credit in your disposal, right? Even though you're not using it, at least you know it's there. So when a business opportunity presents itself, then you can tap into that business line of credit, right? So that's why having access to capital is always good, even if you don't need it, because especially in this economy that we're in, right? The economy is the economy is going through a turbulent time. It's very fragile. You really never, you don't know what's going to what could happen, right? What's going to transpire in the next 12 months, 24 months. So it's always good to have access to capital just in case a business opportunity presents itself. You can tap into that business line of credit, invest it into that new business, and then just pay it back slowly, right? So it's better to have it and not need it than to need it and not have it, right? So that's why you want to secure revolving credit lines early, right? Lines of credit, credit cards, business credit cards, and so on, right? Let the money sit untouched, as I say, right? Just let it, just leave it there, right? And then deploy only when you have, deploy only when your model is ready. So deploy when a business opportunity presents itself. Okay, so the revenue playbook, right? Phase 1, position your personal credit, right? Phase 2, secure anywhere from 30,000 to 100K line. Right now, this depends on how your personal credit is positioned, right? In terms of how long have you had credit? What are the amounts in these straight lines? That's why, as I said, the Funding Academy, we've been running this academy we're going into a 5th year now, right? So for the past 4 years, we've been running our academy. There's so much information in there to help you secure business funding, right? So as I said, the link is going to be below in the description section and also in the comment section. Okay, and make sure and like and subscribe, because I have more videos that I'm going to be uploading. Okay, master the funding game. Revenue is not required for capital. Remember that, right? So you don't need revenue for capital. It's all about your personal credit, right? And then know the underwriting guideline rules before applying. Okay, so I think I'm going to end it here because my computer battery is about to run out. It's running low, right? So I'm going to continue to upload new videos to educate you, to help you secure business funding. And I'll leave the link below to our academy, and make sure you like and subscribe because I have more content to share with you all. Okay, I am out of here. Peace.